Fellas, we've got a problem. We've got a problem. As many of you should know, there was a letter being circulated by Celsius earlier this morning where they were discussing what they basically said that, hey, we're not accepting any more withdrawals or swaps on their platform. In my opinion, and the opinion for many, Celsius right now is insolvent. Now, before you rush into the comments and tell me, you can't say they're insolvent, you have no clue what their assets look like, this and that. But here's the thing, there are two ways to be insolvent. It's two ways to be insolvent, as it's even been mentioned on Twitter. You could be cash flow insolvent, or you could be balance sheet insolvent. Now, most of us, when we think about insolvency, we think about the balance sheet insolvency, right? When you have more liabilities than assets, that's when shit hits the fan. At the very least, Celsius right now is dealing with a cash flow insolvency. They might have all the assets needed to meet all the redemptions on their platform if they were full-on redemptions. They might have that. But when it comes to meeting real-time redemptions right now, they can't do that based on how they invest your crypto and so forth. That's why they shut things down. But let's dive a bit deeper into that. How did they end up in this position? Did they do something nefarious? Is this something isolated just to Celsius, or could we be seeing something like this on other platforms from the crypto space? Now, for those of you that are unaware, Celsius is basically an easy-to-use lending platform. If you have some crypto, you can move it over to Celsius, and they would give you a yield for doing so. And I think a lot of people, those who don't really want to dive far deep into DeFi, it was an easy way to kind of earn a yield on your crypto. Now, there's a particular crypto that has really led to this struggle that Celsius has, which is ETH. So what's the story with ETH? Well, if you transfer your ETH over to Celsius, what they basically end up doing, they end up taking your ETH and staking it. And obviously they receive a return for that staked ETH, and then they pass over those returns over to you, and that's how they're able to create those returns. But once you dive deeper, you understand where there's like a liquidity crunch happening. So if they have their ETH, if they have your ETH in their hands, they've been doing two things. They've been staking it directly with Ethereum on the Beacon chain, or they've been liquid staking it on Lido. The vast majority of the ETH that has been given to Celsius from its users is currently either one of these two piles, either staked on the Beacon chain, or it is liquid staked on Lido. Only about a quarter of it, of all the ETH that's been deposited, currently sits in liquid form, meaning allowed for redemption. Now that data alone is kind of at this point like a week old or something, so the situation could even be more dire at this point. But let's go a bit further into that. If you wanted to stake on Lido, and I'm going to bring this up right now, as we look on the screen right now, we have stake Ether, right? So if you wanted to do it yourself, you would come over here, you connect your wallet, you would enter how much ETH you have, and you will receive 1 ST ETH in return. So if you had 10 ETH and you wanted to stake it through Lido, you would put it through right here and you'd have 10 ST ETH. So every ST ETH is backed by 1 actual ETH. And that is what Celsius has done of vast majority of their ETH that's been given to them by their customers. They've come over to Lido and they've staked it like this. Now, the ST ETH is basically a receipt. Now, you can trade that token. You can trade ST ETH. One way to trade it is on Curve, right? Basically, the largest DApp for liquidity that exists on Ethereum. And right here on this Curve pool, ST ETH to ETH, whichever way you want, you can swap that. So if you do not want to wait for your ETH to get unstaked, you could simply swap out of this receipt token of ST ETH into ETH, right, for liquidity. I think we're all following this at this point, right? But here's where things get a bit more interesting. So if you've done any staking yourself on DeFi, you know usually there's maybe a week, 2 weeks, 3 weeks that you have to wait until you could unstake your tokens. Now, because Ethereum is still waiting to proceed with its upgrade, which is noted to be about 6 months from now, but it's been pushed back so many times now, you can't unstake your ETH. You simply cannot do so. So if you were to stake your ETH right now directly, not liquid staking, but just directly, you would not be able to unstake it. You would not be able to unstake it until they actually upgrade the network, the network or the chain as they've been planning to do so. So I think you're kind of understanding where the issue is coming with Celsius here. They have staked all that Ethereum. They have all this ST ETH, but they can't unstake out of it. Same thing on Lido. You can't take your ST ETH and unstake it from Lido because Lido will give you the same message that you have to wait for the upgrade of the network to come through first. So your only choice is to go into the market, go into an AMM pool, and to swap out your ST ETH for ETH. That's the only option. Well, as we look right now, we can see what the exchange rate is. If you were to swap your ST ETH into ETH, you would receive 0.958 ETH. That's what you would receive. Even though when you first created this receipt token, it was 1-to-1, you see now that that same token, you get much less ETH than you typically would. Now, it would trade for a discount. Naturally, it does trade for about a discount, but not this much of a discount. And once this discount started coming in, that's when there's been a lot more talk as to whether or not Celsius can really weather the storm. Because here's the thing. If Celsius wanted to continue to make good on these redemptions of people withdrawing their ETH from their platform, they would be put in a position where they have to swap out of the ST ETH into ETH on Curve. And they would do it at a loss. Every single ETH would be done at a loss and it would come out of their pocket, right? They can't really put that on the users. They can't tell the users, well, because of the way we staked this and that, instead of giving you back 5 ETH, which you gave us, we'll give you back 4.5, right? They can't really do that without a huge uproar. Now, as we look at this chart here, you can kind of see what the spread tends to be. Always trades below 1. Always trades below 1. Sometimes tighter, but still below 1, right? And then you kind of see the drop-off that started occurring here the last couple of days here. And today it actually reached as low as 0.93 and some change. It's actually recovering right now. This is on Balancer, by the way. But it is recovering. So that's, that's obviously some good news. So what Celsius is just simply they're trying to buy themselves time. They're trying to buy themselves time. As we've seen, the crypto markets, equity markets, everything's just been getting absolutely roasted. Roasted. As I talk to you, Bitcoin is trading at 23,000. 23,000. Here's the lows over here. Not even that much higher from its lows, right? It hasn't been that much of a bounce altogether. If we look over to ETH right now, it's also not going to look pretty here as we wait for the charts to load, right? The daily chart, everything just looks nasty. Everything looks nasty as people are just trying to simply, sell out of their assets. No one knows how bad things are going to get, especially as we saw with equity markets. We had NASDAQ dropping over 4% today. Some other issues to bring up here. Celsius also has a fairly large loan position out there right now that they're currently defending. We saw messages coming out on Twitter as people were reporting it as Celsius was moving funds from their wallets over to FTX, and it's obvious now that they're doing that to help try to collateralize their current loan position. They've borrowed 278 million DAI, and DAI is pegged to $1. That is currently their collateral here. And this is their liquidation zone at $18,000. Now, this liquidation zone was above $20,000 at some point earlier today, so it was much riskier, but they continue to bring more assets into it. There's a good argument to be made that it's your assets, maybe, that were brought over to help kind of buffer this up. And this is kind of where I get to when I say that we at the very least know that they are insolvent when it comes to cash flows right now. In terms of their balance sheet, we do not know. We do not know. But as we look at stuff like this, if they do get liquidated here, and when you get liquidated, obviously it comes at a loss. Severe loss. All of this can hurt the amount of assets they have on the books at the end of the day, to the point that, yes, they may not have enough to cover all of the liabilities out there. We've also seen, as of recent, Celsius has fallen victim to 2 hacks. They've lost funds in 2 hacks. On top of that, they also lost a little bit of funds with the whole Terra Luna drama of UST going off peg. Now, credit to them, they did end up selling out of that UST when the peg was still above 90. But they still lost tens of thousands of dollars, tens of millions of dollars due to that. And even as we talked to that, it's even been said that, people were depositing stable coins such as USDC onto their platform, and they were taking that USDC, converting it over to UST, putting it into Anchor for that 20% yield, right? That's fairly risky, right? So again, you thought you had a fairly stable investment, pun intended, I guess, right? You just have USDC. I'm giving it over to Celsius. They're going to give me whatever yield they believe is safe and all. And they're taking it, converting it to another stable coin. Safe to say that drastically more riskier, right? You're going from one that probably has the best assertions and best regulations in terms of whether or not everything is backed, to one that's an algo coin, which, I mean, as we saw now, as history says, not a single algo coin continues ever to succeed. Now, it's going to be tough for Celsius to walk this back. The moment they open the door up, the moment they say, okay, withdrawals are allowed, people are going to rush in and people are going to withdraw right out of their platform. They might be right back in the same position that they are today. I'm not sure what they plan on doing here. They might decide to sit on their butts and hope that the market just goes on this crazy euphoric run and people are like, you know what, I'm not fearful anymore. It's okay. I don't have to withdraw anything. Everything is great. Everything is dandy. We're likely not going to see that. We're just likely not going to see that. So if that's what they're waiting for, that's going to take a very long time. What's a more realistic belief is that maybe they will look to try to raise some money. If they can find some investors, if they're going to show investors, hey, listen, like, look at our assets, look at our liabilities, everything backs out. We're not insolvent when it comes to things like that. We're fine. We just need some money right now to run our operations. That's where our issue is, operational. If they raise that money and they open the door up, people will still come in. People will still withdraw. But guess what? People withdraw. Everything is fine. A few weeks passes, a few months passes. People come right back in. People will come back in so they can regain that trust. But for that to happen, they do have to raise money. They do have to prove to investors that, hey, listen, your money will not be at risk in trying to kind of bail us out in this case. Now, during this time, I also suggest, in my opinion, if I had any significant sum of money in any exchange, any lending platform, any place that basically holds my crypto, I would withdraw it. It doesn't make any sense to keep anything at any of these places right now. We do not know how bad the situation can get. Do not believe what the CEOs of some of these projects are telling you. We even saw this with Celsius, how just 24 hours before, we had the project's Twitter, or even the CEO of Celsius telling us there's no issues with our protocol. No issues whatsoever. Your crypto is safe with us. If you want to withdraw, no problems. And then less than 24 hours later, they block things off. And do you think that things change that much in 24 hours? Of course not. They have to say what they have to say to make sure that there isn't going to be fear. Because if they say anything else, if they come out and they're honest and they say like, yeah, things look kind of, rough for us right now, people are going to come in and it's going to, the prophecy will be fulfilled, right? So they have to act strong. They have to act strong. Just don't believe anything, okay? It doesn't matter. If you have your money in what it might be, Nexo is a very similar, platform to Celsius. I see they've kind of even said that they were looking to maybe, pick up a bunch of debt or even take over Celsius and something like that. Obviously, they're trying to act strong. Like, look, we got all this cash, right? We have no issues. No issues whatsoever. I mean, listen, yeah, the cynic can say that they knew that offer would be rejected by Celsius. But it's a great way to show the community, like, look, we got so much money, we can do an acquisition, right? Again, take your funds out for now. Give up that few points of interest for the next month, 2 months, 3 months. See how things pan out. We got people in Celsius right now that, again, simply had stable coins deposited there, and everything's blocked off. If they want to buy the dip in crypto right now, or tomorrow, or next week, if it gets worse, they can't even do so. Their money is stuck there. So don't be in that same position. Risk and reward. You have to just simply weigh it. Doesn't make sense to collect a few points of interest and risk the fact that you could be locked away from your crypto. Now, worst case scenario, your crypto's gone forever. It's not the first time it's happened. It's not going to be the last time it's happened. I'm not going to go as far as saying that's going to be the case. But the opportunity cost of not having access to it is also very great. Now, as a final thing that I want to say, this issue right now, I guess some people can look at it and say it's a bank run. And that's why they're blocking off deposits. It's also fair to say that this problem is not specific or unique to the crypto industry or to DeFi. We've obviously seen it in TradeFi with real banks. But the key difference is There's been laws put in place, especially, let's say, in the USA. I know US law the most. There's things like FDIC insurance, right? For every checking account, any sort of account at a bank, even a brokerage account, $250,000 insured by the federal government, right? At the same time, we know bailouts. The government will come in and bail out a bank if they need to do so. There's a lot more consumer protections when it comes to things like that. A bank run in TradeFi is still bad, but there's some protection to go along with it. We do not have that luxury, obviously, of the way things are set up right now within the crypto space. Even though, let's be honest here, like Celsius is not DApp or anything along those lines. It's as centralized as it gets, right? They tell you debank yourself and all that stuff to get you hyped up. You feel like you're part of a movement, but that's all bullshit, right? I mean, look what they did. Again, they just obviously snap of a finger. You can't touch your assets, right? None of that has changed. So all the same restrictions you get in TradeFi are happening right now in Celsius, except that none of your funds are insured whatsoever. As opposed to Chase, at very least, you have that to kind of lean on, right? But that's what I wanted to say. Just give you guys a quick little update for those curious as to what's going on with Celsius. If you have any questions, throw them in the comments below. Other than that, thanks for watching. Subscribe for more DeFi content, and have a great day.